All right, there's a look at the market action. We are indicated to open sharply higher here, more than a 1,000-point surge on the Dow Jones Industrial Average. I'm taking a look at names like United Health and Goldman Sachs that are moving significantly higher, up as much as 7% in the pre-market. The financials as a group are ripping here, so that's one key winner. Tesla is also popping at the same time that the green energy sector is getting crushed right now. Everything from First Solar to Sunrun to Plug Power and Canadian Solar down as much as 18%. Tesla, a relative winner here, potentially, according to Dan Ives at Wedbush, who says if those subsidies are rolled back on electric vehicles, Tesla already has a business model to endure that. And they think at Wedbush that the Trump victory could add $40 to $50 to Tesla's stock. It's already added 30, we can see, and catapult it to a $1 trillion market cap. It's not all roses and sunshine in the market. The equity market is taking place. The equity market rally is taking place even as we're seeing a little bit of a meltdown in the bond market right now. Can a rally in equities go hand in hand with a sharp sell-off in the U.S. 10-year, for example, where we're seeing that yield hit the highest level in 3 months? And of course, we have a federal rate decision tomorrow. If that weren't enough to contend with, let's bring in Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. Thank you so much for joining us, Victoria. First, just on the Trump trade that is being unleashed, is it too exuberant? Is it not exuberant enough?
Yeah, Amber, I think definitely we have a knee-jerk reaction in the markets here today, and that's anticipated when the news hits. I mean, it's not just a Donald Trump win, but it is looking close to being a Republican sweep. As you mentioned, the House is still a little too close to call, but it does give a lot of momentum to some of what we would call the Trump trades. And when you look at the things that were aligned with Trump, you're looking at the tech trade, you're looking at more of the growth names that are around financials, like you've mentioned, are doing really well. Some of the non-green energy names are doing better. So not surprised that we're seeing this move right now. The question is, how enduring is this? I would assume we'll see a little bit of a pullback in the coming days as things start to settle down, and how it relates to the move in the bond market that you were just speaking about.
Well, let's talk about that. When do you start to get worried about the bond market and these so-called bond vigilantes coming into the market and kind of enforcing fiscal discipline at a time where investors are betting on higher deficits?
I think we're seeing those bond vigilantes in play right now. I think we've been seeing them at work since the last FOMC meeting back on September 18th. Yields have moved tremendously higher, and now just in the last 24 hours, we've moved higher again. And I think there's multiple reasons for that. One, there's probably some repricing as to what the expectations were on how quickly the Fed was going to lower rates. I think if you're sitting in the Fed meeting this week, you have to take a step back and say, okay, wait a minute, I know a 25 basis point cut is priced into this market, but we're seeing heavy growth. We're seeing an economy that is stronger than what we anticipated. And now there's the possibility of a second wave of inflation. Really, regardless of who won the presidential election, it looked like we would have higher deficits. That's going to push yields higher, that inflation component going to be higher. So even though a 25 basis point cut is priced in for this week, I wouldn't be completely surprised if the Fed decides to stand pat, but they usually go with what the market's expecting. If they do, I think we get a pause in December and let the bond market kind of catch its breath a little bit and feed in to what the bond vigilantes are wanting.
Well, let's talk about this in a related way as it pertains to the financials. The bank stocks are ripping higher, even as those yields are going up. Even the regional banks are doing extraordinarily well, and maybe that's more just to focus on the economy, the perception that the economy can remain strong over, the complication of these higher interest rates. How do you think about the move in financials? Do you like them here? Would you deploy fresh dollars?
So financials is a sector we have liked all year long. They got hit pretty hard back at the beginning of the year, and so that was an opportunity to get in there and add to those positions, and they have just continued to do well. And if we look where we are right now, some of the gains that we're seeing is because of the Basel III regulations and things that are going on around there, less regulations for the financials. That's helping those stocks do well. And you look at the yield curve is steepening. That's going to help the banks do well. And it's not just the 2-year to 10-year. You look at the 3-month bill to the 10-year, which really is where banks are affected. That's down to only being inverted by like 12 basis points. So it's very close to being flat there. Again, a positive for the financials. And if the economy continues to do well and consumers continue to spend, we are in a holiday shopping season, then again, that's positive for the larger banks with the credit cards that they have there. So I do think it's still a place you can put money to work. I would do a little bit at a time, and pick your spots. If the market pulls back a little bit, you get an opportunity to go in there. Even though regional banks are doing well, we like the big banks because of the strength of those balance sheets, and we think there's still some volatility in the market. They'll hold up best.
Let's talk tech as well. How do you expect tech to progress? It's been so dominant. I also think about what a change in government also means for the regulatory landscape, particularly if there's a change at the head of the FTC, which has been maybe a thorn in the side of some of these big tech companies. Do you expect kind of a sea change there, or is that a little bit more difficult to handicap in terms of what it means for investment returns?
Well, I think now that we're through kind of the big 7 names in regards to earnings, except for NVIDIA that comes in another week and a half or so, we've gotten through some of the hurdles there. Those names have picked up momentum again and have taken leadership again. But, regulation, not just in tech, but across the board, is probably going to be more favorable for corporations. Another thing that I think will support tech with a Donald Trump election is the fact that Donald Trump is more of a strong dollar candidate and will be a strong dollar president. That helps support tech. That helps support the QQQs when you think of how a dollar relates to the yen. You won't have that yen carry issue that we had before. And the Trump victory has been highly correlated to the triple Qs for the last few months. So I think tech is going to continue to do better for multiple reasons there. And again, if growth is now going to be what we're looking at, less regulation, stronger dollar, that should all be positive for tech, along with the boost in AI, which Trump has spoken about before as well.
The big vulnerability, of course, is tariffs. And that's kind of a black box right now in terms of, I think directionally we know there will be more. We don't really know which countries, and we don't really know the magnitude, though markets are taking their best guess. The Mexican peso is down sharply to the lowest level since August 2022. The Chinese yuan is weakening by the most in 2 years. Even our Canadian dollar is getting hit. How do you effectively discount the risk that increased tariffs bring?
Yeah, it's a difficult concept to really trade around. I think you have to separate the idea of tariffs on China, which we know will be coming, and we know those will be increased. And so you're going to have some effects in regards to supply chain. We'll probably see more things moving over towards India. So I think you could do some trading around that concept. But when it comes to tariffs across the board for the rest of the world, that's a little more difficult to try to play out. We've heard that it said that these are just negotiating tools for Trump. So how big they're going to be, are they going to pass, who the Treasury Secretary is going to be, and how that plays into what happens with tariffs. All of that right now is still up in the air and a lot of uncertainty. And obviously that brings NAFTA into it as well, talking about Mexico and then you there in Canada. There's some implications that we could have some renegotiations there as well. So a lot of uncertainty in those areas. But for tariffs, if you want to trade around it now, I think you have to look at just maybe the China-India supply chain trade.